With the stock market only open for 6.5 hours a day, it's not surprising that trading outside normal hours can have outsized importance. As Jared Blikre writes in today's morning brief, for the bulls to win out, they need to assert dominance, not only during normal trading hours, but also after. There's been a major push, especially within the last 10 years, not just for exchanges to recognize some of the before the bell and after the bell movements that are taking place in orders that are continuing to flow in, especially considering the amount of earnings reports that investors well, not like ourselves, but we ourselves, as well as investors, are parsing through both before the bell and after the bell and trying to set trades around that activity and pivotal information that companies unveil.
Yeah, clearly I would think something has to change, just given I think this increased volatility in this environment with all the liquidity sloshing around the markets. And look at a firm. I mean, you see these double-digit declines on the slightest bit of news here. I hear what Jared's saying. I think it's a well-written newsletter.
Yeah, so basically what he's saying is that we have to see more buying after normal trading hours. What's interesting is that folks who are trading those hours aren't the big institutional traders, right? It's smaller traders because there's not enough liquidity at that time to have larger institutions. But nonetheless, it is interesting that those periods of time lead the market. He also points out all of the net gains in the market have been made on Tuesdays, Thursdays, and Fridays. I don't know, there's all this interesting sort of market tidbits that Jared is pulling out to say really the narrative needs to change before stocks can gain in a more sustainable fashion.